Good morning and welcome back to Almus Market Mornings. As we once again arrive at the end of the week with one eyes on geopolitics, I would say yesterday was a different kind of war markets were observing, and that was the intervention by the Bank of Japan in yen. Yen, which was trading around 163 against the dollar, quickly strengthened towards 157 before settling towards 160 half. The intraday strength was the sharpest since 2023. The intervention is of significance too because it is happening before today's BOJ's interest rate decision. Apart from this, a lot of moves in equities. Kospi is up 15%. Tech yesterday had earnings which saw Apple lose out due to chip shortages. Amazon's cloud business is doing well. So stuff is all over the place. But from the moves that has happened, including the paring back of yields, some rally in pockets of equities, it seems that money is going back towards risk this weekend. Good morning, JK. As we end the week, what's your sense on the sentiment? Are we seeing any new themes emerge?
Good morning, Swaraj. Not sure if we have a single theme running in the market because I'm seeing volatility surge everywhere in the last 2 days. And of course, the starting point was an FOMC outcome on Wednesday. And, that resulted in a steep curve of the yields after Fed failed to convince the market that they are closer to handling the rising inflation, which has been above their target for 5 years. And this is the largest single day steepening and second largest one day rise in 30-year yields that was seen anytime. And rather than restoring confidence, actually Warsh has been seen as lacking a clear policy response to persistent inflation, which has encouraged investors to demand a higher term premium. And we all know that Fed has a problem on the fiscal. The Treasury has a problem on the fiscal, and a problem on the huge debt pile as well. So the bond yields have been rising. Yes, there was slight retrace yesterday, but I think their direction is definitely up, and we have seen a huge rise in the yields already. And then we had the dollar. Dollar had also reacted negatively to the Fed statement and lack of direction from the Warsh press conference as well. There is a sense that the Fed is falling behind the curve, and that has led the dollar to lose out against most currencies. Yen was, of course, somewhat on the sidelines when all this was happening because yen had its own timeline and agenda, and this was set by BOJ yesterday. We had a report of Bank of Japan intervention in US hours, which brought down the yen, or rather the USD yen, from 163.70 to 158. And of course, it has since recovered to 160.50, awaiting Bank of Japan rate decision. The timing of the intervention was a surprise, and hence it had a very good effect. Now, market awaits the BOJ rate decision, and a clear hawkish statement from BOJ will see the yen gains sustained. In fact, the move in yen had a hint in European hours when the Japanese Prime Minister vowed to reduce reduce the consumption tax from 8% to 1% without resorting to new fiscal measures, and that sort of gave the market a sense that Japanese will somewhat rein in their ballooning fiscal. And also there has been some sort of opposition to the PM ignoring the yen weakness, which has been contributing to imported inflation as well. So all these together, and then of course the intervention, all this brought the yen to dollar yen to a lower level. As I said, Bank of Japan meeting in some time now today, and their statement as well as the press conference by UEDA will be keenly looked ahead to. Dollar weakness was also reiterated because Eurozone data yesterday was very strong. The GDP number beat expectations, and the German inflation was higher, all pointing to the fact that in September, BCP is bound to raise rates. On the contrary, US economic data was soft. The GDP was at 1.5% in the preliminary estimate for the second quarter, despite a rise in the real consumer spending. That's because of the huge rise in imports as well as the government spending falling by 8%. And PC inflation was softer, but that was as expected. Not much of significance to it because we know that oil prices have since risen, and June inflation was factoring in a fall in the oil prices. So all in all, a lot of factors work for the dollar to soften. In fact, there is a report which says that South Korea also conducted dollar ceiling intervention yesterday that brought down the Korean won. Uh, on the higher side against the dollar. Amid all this, of course, the rupee remains stable, but on the at the stronger level. Even yesterday, due to month-end demand, when the dollar was trying to break the 95.75 mark, PSU banks were cited selling dollars. But all eyes will be on the flows. So I think so long as that remains positive, rupee does not have much worries. As I reiterated yesterday, uh, the RBI will not be comfortable with the rapid appreciation of the rupee, and they will also look to absorb the flows at the lower ends. So rupee should settle in a range between 95.20 and 96.20 for the time being. Now, of course, I failed to mention about the other area of volatility, that is the stocks. Now, just look at a few markets. South Korea was down 10% yesterday, and today it is up by 15%. Japan was down 2% yesterday and up 5% today. Nasdaq was nearly 2% down on Wednesday and rose 3% yesterday. And one of the major factors for the turnaround was the Microsoft earnings and the statements. The significance was that not merely they beat estimates on the earnings, but they also changed the narrative around AI spending. And we for the past several weeks, investors had become worried that the hyperscalers were spending hundreds of billions of dollars on AI infrastructure without clear evidence of adequate returns. And Microsoft was the first major company to convincingly demonstrate that those investments are translating into stronger growth and profitability. The market took it with both hands, and Nasdaq rallied. Futures in Nasdaq also showing around 200 points higher, and promptly the Taiwanese, Korean, and Japanese markets have rallied as well. Overall, you have a sense that risk assets are rallying. Despite the fact that the yields are still on the higher side. So we have to wait and see how much this fresh rally continues disregarding the yields. On the on the rupee side, don't expect much, but the market focus will be on the jobs data next week, and a lot of preliminary indicators for the same, the jobs and the ADP numbers as well. For the time being, the happenings in the Gulf are given secondary importance, although any rise in the oil price above 95 would raise fresh concerns, and that can put all these rallies in check. So a lot of volatility, and it's set to continue into the next week. Thank you.
Thank you, Dick. And yeah, a lot of sharp moves, as you mentioned. South Korea, which was down yesterday 10%, today is up 15%. Similar for Japan, US. Interestingly, the Microsoft change in narrative for the AI spending, they were able to somewhat convince market participants that that spending is translating into earnings. And that has somewhat reassured markets on the tech sector rally that has happened. So markets need one excuse or the other, either to sell off the stocks or buy into the stocks. So this is one of the reasons. Apart from that, this week we saw dollar index lose out post the FOMC. It was also added to by the soft economic data from the US. Eurozone economic data was stronger. So mixed bag of updates from the economic data side. Bond yields will remain sort of under watch, because even though it did cool off yesterday, we saw the long end in US after the FOMC rise quite sharply, because somewhere markets is not able to believe Warsh's plan. So this theme will be closely watched. At the same time, geopolitics has its own updates. We have seen dollar index lose out. Rupee is on the stronger side as of now. So these are a few updates that may carry on to the next week as well. That's it from Sri. Thanks for listening. We will catch up tomorrow. We'll catch up on Monday with a fresh round of updates. Have a great weekend.